Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 1.57% to 39,912. Ethereum down 3.71% to 2774. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. We've had a couple of red days recently because there's a lot of geopolitical tension in the world at present, but I'd just like to share something really important with you. Rule 470, lack of knowledge causes losses. If you look across your life, anything that you have expertise in, people could say, look, you're so successful, you do that so well, whatever that skill is. But what they don't see is the countless hours of effort, dedication, persistence, failure, sacrifice, hard work, good habits that have gone into building your skill. For example, professional tennis players spend years, decades at their craft. Surgeons spend years learning anatomy, biology, everything about the human condition, and practicing. Even professional gamblers, they don't gamble, they're actually statisticians and mathematicians. But yet many people think that they can walk into highly paid professions with absolutely no knowledge at all and expect to win. That's just a fantasy. This absolutely applies in the crypto market. You need to know what you're doing. And I'm going to cover various things off inside this video to help give you a structure. There's a basic 6-point structure that you need to apply if you want to be profitable in the crypto market. The first thing that you must always understand, if you don't have the knowledge, you're going to make losses. How you think in terms of zone 1 or zone 2 behavior, or zone 3 or zone 4 behavior is really important. You need to do ready, aim, fire, not fire, aim, ready, which is what most people do. To get ready, you need to know the foundations of how to actually draw support and resistance. To get ready, we need to look at the outside trends. You've seen all the problems with Russia and Ukraine, the global instability that is causing. That's a reason we must look outside the charts. When we take aim, we need to find the market's focus. This is all about timing. And another part of aiming, especially keeping your aim steady, is the understanding of how wealth is generated. If you don't have the right psychology, you will not hold on to money. Unfortunately, it's that simple. And finally, you pull the trigger. You know when to buy and when to sell. Many people, when they enter into the crypto market, and the stock market indeed, they just say, I want to know when to buy and when to sell. There's a lot more to that. It's like, for example, somebody getting into tennis and learning for the first time, saying, I want to go to center court. I want to play the world number 1 and the world number 2. You'd last about 3 seconds that way. People become the top of their profession after decades and decades of concentrated study. And I'm not suggesting that you need to put decades in, but everybody does need to slow down. People need to look at the charts to understand what the charts are telling them, to put in the hard work, to do the education. I guess this is not a traditional thing that you would hear from a crypto channel. It's all, where's the next 500x? I can tell you, skill kills luck in the long run. Luck does not survive. The first piece of skill that you need to have is understanding Rule 45. No alt can escape Bitcoin's gravity. If we look at Bitcoin's chart as a new investor or trader, and we know that all investors become traders anytime they buy or sell, what are we actually looking at here? What does this mean? For a medical professional, this could be like an ECG readout. What is it actually telling you? If you saw an ECG readout and you're not a medical professional, would you understand how to interpret it? This is an example of an ECG reading. I can believe that if you're not a medical professional, you would not know what this means. It's kind of the same. If you haven't studied crypto technical analysis, you don't know what this means. I'd like to give you some pointers how to read this ECG of price. Many people think learning the ECG of price is really simple. It is not. It does take a bit of effort. And rule 141, to go slow, to go fast, is really important. The other thing to note is that technical analysis, drawing support and resistance lines, using stock market analysis and forex analysis and applying it to crypto is actually quite problematic. Crypto has exponential price movements. That means they can go up and down 30% on average per month easily. That's just normal volatility. The stock market is simply not like that. There are a lot of steps that you'll need to go through to be able to understand support and resistance, but I want to give you some basics. From a very high level, we can see that support is what happens when price comes down and stops. Support levels basically act as fences towards price decreasing. Resistance levels act as fences to stop price increasing. So where are these potential support and resistance levels? If we look through here, for example, we can see a level of support through this area. What does this actually mean? What's this support level mean? We're at currently 40,000. If price comes down to this level, and what is that level? That's 37,628. We would expect price to hover around that level, to not just slice through it. These resistance and support levels are really important. For example, if we're talking about a resistance level, we have one up around 44,667. What does that actually mean? When price comes back up, it should have a little bit of trouble getting above this level. It could hit it, wobble, hit it, wobble. And you can see this is why resistance levels are important. When a resistance level is overcome, price generally will keep making its way up until it hits a further resistance level. It doesn't have to be on the ping. For example, we had a resistance level up here at 64,100. We saw price go above, but then it couldn't maintain it. It couldn't actually turn that once resistance into support. And this brings out a really dynamic nature of support and resistance lines. What was resistance can become support, and if it's broken through, it becomes resistance again, and we can see that in this price action here. It's really important to understand how price moves. In fact, it is the most important thing to understand in the crypto market. But why is that? That's because of Rule 74, technicals beat fundamentals. Technical is the reality of price action. Fundamentals are the promise of price action. Note the difference. Actual price, a promise of price. This is really important to understand on your crypto journey. Rule 138 is also really important. All investors become traders every time they buy or sell. One thing that many investors say, I don't care about price. I heard the promise. The promise is really good. How do you know the promise is real? And if the promise is real, and some of these promises are real, how long will it take to get there? What is the actual ECG of the project, the price chart, the technicals? What are they telling you? Another thing that many people in the crypto market are unaware of, there is a correlation between crypto and the main stock market. What we see here in green is the NASDAQ 100, the technology index of the stock market. What do you see here? When Bitcoin is coming down, what is the NASDAQ doing? When it's flattening out, this is the weekend price action. What is actually going on there? When Bitcoin comes up, what is happening? Who is controlling who here? We're assuming they're people. The truth is that the crypto market is around $2 trillion in market capitalization. Stocks about 120 trillion. They're quite a bit larger than the crypto market, and the bond market over 120 trillion as well. Cryptocurrencies are the ownership layer of Web 3.0, the Internet of Value, and that's why you'll see so many comparisons on crypto's growth rate compared to the Internet's growth rate. We're really early. We're around the year 2000, and in terms of adoption, in terms of the S-curve, we're actually just taking off. What you will find, the more time you spend in all financial markets, everything is connected. That's why, in order to understand Bitcoin's price action, and you need that to understand your alt's price action, if you don't understand how Bitcoin is moving, your alts will continuously perplex you. And the way to understand or to gain a perspective on what could be happening to Bitcoin is to look at the main markets. We can see the main markets, the fear gauge has been coming up. What does that mean? When fear enters a market, price goes down. This is just traditional psychology and crowd behavior analysis. When you have a lot of people being fearful, they exit their positions, they sell. They sell on fear. Professionals buy the fear that people are selling. When we see oil did a retracement and it actually broke a couple of levels of support here. This is actually important. If we could potentially see a leg down, oil may be turning over, maybe rolling over. We'll have to keep our eye on it. It did do a bit of a flip up here, as did gold. Gold was coming down and it's flipped up, but it's going to hit a resistance level at around the 1907.20 mark. What do we see here? Economic concern measured through bond prices. The economic concern is actually increasing, but it's going towards a resistance level. In fact, quite a few of them. That means when price hits resistance, it generally backs down away from it. We need to keep these factors in mind, and you can see support and resistance occurs over all markets. We can see the US dollar just finding its support line here. The increase in gold is a little concerning to us. That would say that geopolitical risk, absolutely caused by Russia, is unsettling markets. And we've seen the markets react to a decrease in tension between Russia and the Ukraine as a rallying in price, an increase in tension with Russia as a sell-off. What we do have is that we have a particular date, and that particular date is February the 20th, where the Russian foreign minister said the supposed war games will end. If they end, that means that troops will withdraw. If we see troops withdrawing, the markets will rally. And don't forget, we've had a very substantial uptick from this low around the 24th of January to this high, the 10th of February. All price moves in a wave. So as price moves up, it will move down. I believe this is a really key line to watch. If we see tensions increasing, and we're going to get negative price momentum inside all markets, not just crypto. It's also quite useful to look at gold overlaid with Bitcoin. There are many influencers that will show you a gold chart and compare it to Bitcoin without actually doing this. You should always be able to see both on any particular chart, because you can see that close is not actual. We saw Bitcoin selling down here, gold sold down, and this is on a daily chart. We can see here that gold was rallying up and Bitcoin came down, but a lot of time gold and Bitcoin are in sync. And recently, when gold was going up, Bitcoin was coming down. When gold came down, Bitcoin came up. and we saw a lot of increase in gold's price recently, and Bitcoin has been coming down. This doesn't mean that they've inverted, they're going the opposite direction. It only means that we're having a synchronization between inversion in prices, but often you can see that it actually follows Bitcoin's price. Be really careful about people just throwing out analysis out there without checking it yourself first. As a former gold trader, I've seen gold basically drop off a cliff like this as soon as tensions ease, so just beware of that. Gold may actually be subject to some very negative price momentum if things stabilize. Let's just apply Rule 470 again. Lack of knowledge causes losses. We can't just look at gold in the context of Bitcoin only. We must look at gold in the context of gold itself. What do we see here? From November 20, even before, gold has been on the way down. It's slowly starting to turn around. There is some positive momentum inside gold's price. This actually means that gold and the relationship with Bitcoin could decouple. And that's because the technicals of the gold chart will override any association. So what does this actually mean? It means something really fascinating. We could get an easing of geopolitical risk. Everything could go back to normal. Gold could slide down to this particular resistance line. Previous resistance turned to support at around 1849. It could go a little bit lower down to 1838 because of the support line here. Gold could actually start to rally up through these different levels. When the March 2020 Black Swan hit, from the bottom of that actual price action, from the turnaround, gold did really, really well. It came up over 40%. What we've seen in the intervening months is gold basically starting to turn around, starting to change trend, and we can see it has effectively changed trend. This would mean that we would expect gold to do its waves, to retest this previous resistance level as support and continue onwards and upwards. And we've seen that happen many, many times in the market as well. From a crypto stance, it's important to understand what you're looking at in this particular chart. What we can see is there was about a 14% monster rally in gold over a stunning 84 days that saw the price increase by 14%. We can get that in one day in crypto. And what about this monster rally? Over a mere 47 days, it came up 9.15%. Wow, good on you, gold. So if we do see a retesting of this now support line and a rallying up to the previous high, it will do an incredible 12.97% increase. As crypto is such a fast-moving market, it's a really important idea to look at the lower time frames, such as the 2 hours. They can give us really, really good signals. We can see that price was just plummeting down here in yesterday's episode, and I said this particular line of support is really, really strong. It's a fence, and we saw that for quite a few hours it held that fence, dipped under. Now what does this mean? To explain this, I'm going to bring in a cast of characters, including Percy the magnetic price sheep and his friends FOMO and FUD. When I was lecturing first and second year statistics, I used the numbers 1, 2, 3, 4, 5 to teach the most advanced mathematical concepts. And things don't have to be complex. It's all about understanding. What we see here, Percy is price. What has Percy been up to? We saw Percy just, for example, these fences. This is a support line if the price is above that, and it becomes a resistance line when price falls below it. What we see, magnetism, is the concept that you always move between a resistance level and a support level. Resistance to support. For example, support to resistance, down, couldn't maintain it, and then fell. Where was the next level of support? around here, but it didn't hold. Coming down, didn't hold. Here, held, because it was really strong. Many people thought it was game over when price was coming down. But the concept is, if you look at yesterday's video, it was basically spot on here. And I said we would expect this fence to hold. And it did hold for quite a while. And then we saw an increase in tension with Russia. And what happened? We actually fell below. What do we expect to happen here? Notice how price is magnetized. It's first magnetized to where it breaches, where the fence was. It tries to come back up to the fence. It's almost like Percy says, I don't want to go down there. I don't want to go down there. I want to come back to where I was. Oh, Percy's like 100 years old too. Who said learning can't be fun? What we can see is just Percy didn't make it. He's getting weaker and weaker and weaker. He's trying, but he's getting weaker. He's probably going to visit his friend FUD down around the 38,935 level, or down lower around the 38,303 level. His poor old friend FOMO is really missing out. FOMO is calling to Percy, the magnetic price sheet, come up and visit me. Oh, Percy, how could you? The thing to bear in mind is that this support line around, for example, 38,441 and around 38,300, they're actually quite strong as well. We would expect the magnetism to be drawn down to this level, and it could be just via a long wick. We have to see how things play out, but please bear in mind, it's the weekend. The weekend trading volumes can be thin, and it doesn't take much money to move the market. A lot of people, when they're new to the crypto market, they'll buy some incredibly interesting, beloved alt, and that alt will be influenced by Bitcoin's gravity, especially when Bitcoin does these kind of things, move between, on strength, different support and resistance lines. Please be aware of that. Your alt's fate is directly tied to Bitcoin. We can see already some things are starting to turn green. And why is that? Because Bitcoin did it. We can see here Bitcoin has been coming up. This is positive price momentum. Let's just return to Rule 470. A lack of knowledge causes losses. When people first enter the crypto market, they don't understand that Bitcoin's gravity affects all alts. They just grab a beloved alt, it doesn't matter what it is, and they think that they can just look at the price action of that alt. From a trading and investment perspective, just looking at a singular alt just puts you in this position of picking up a gun that could be firing back on you, or blindfolding yourself and not knowing where the target is. It's a really, really dangerous thing. You must understand Bitcoin first. To get around these kind of problems, crypto technical analysts scientifically track investor attention. They know how to draw the support and resistance lines. They know how to analyze and contextualize the external markets, just like what we've done with gold. They understand how to find the market's focus. They understand the rules of wealth and riches, and it's really important to be able to do that. And they have particular trading and investing styles that will work with crypto. It is literally all about knowledge. Have a look at Ethereum. Just this blue line is Bitcoin's fingerprint. This is Bitcoin's price action. Notice how they follow each other. What about Binance Coin? Notice how Bitcoin's fingerprint is in alignment with Binance Coin. What about XRP? It's basically in alignment, but XRP is showing some strength. This is really good for XRP and very, very good for the entire crypto market as well. We can see ADA, Cardano, following Bitcoin's fingerprint, but it's got upside and downside momentum. Solana, the same, but following the directional move of Bitcoin. Bitcoin goes up, Solana goes up. Bitcoin goes down, Solana goes down. Not understanding Bitcoin's price movement with your beloved alt, you are going to lose money, guaranteed. We can see AVAX following Bitcoin's price direction, and also Luna, but Luna is looking a little bit weaker at the moment. There's a hidden factor behind gravity. When we see something like Luna being suppressed, going down, showing weakness, and it's a strong project, that gravity will be overcome by what we call a snapback. When you get a snapback, you will actually see prices rally more strongly than other alts. How do we actually position into trades? First of all, you need to set up your support and resistance lines, and then you need targets, and then you need to layer in your buys and your sells. We looked at ADA and Solano in yesterday's episode. What we always do is buy at levels of support below. Please do not go all in, and do not go all out. Sometimes the community reaches out and asks me, Ken, do you sell at a loss? My answer to that, when I was really early in my trading and investing career, yeah, I did do that. And then everything turned around because I got absolutely sick of selling at a loss only to see things rebound. I, like many people early on in my career, many decades ago, was expert at selling at the bottom. I found a really good way to overcome this is to just create a law, never sell at a loss. Now, of course, it really depends because there are caveats to that law. If you're doing any form of leverage trade, you're going to get crushed in crypto, so I suggest you do not do that. One thing that you always want to do is just buy at spot in crypto. You can be aware of the derivatives markets. That's really good, and that is important. But please do not use leverage until you absolutely know what you're doing. And even then, there's no compulsion to do it. People use leverage in the stock market and Forex because they have to. The volatility is so incredibly low. They make their margins off 10-cent moves on a $25 stock. We just don't need to do that in crypto. You can hold and you can weather the storm. What I would always suggest, unless you have an incredibly good reason for it, do not sell at a loss. If you're using leverage, you're doing it wrong already. I know so many influencers push out their leverage links, and that's fine for them, but it's not good for the audience. They're the same kind of people that have a lot of scammer comments in their comments section. We do not have any scammers in our comments section. They come in, we kill them off pretty much instantly. Because of that, we don't grow very quickly as a community, but I always say eagles don't flock. And if you've come across this video, I believe you are an eagle. And you'll just love our community because we have a community of eagles. They're just amazing people. When it comes to placing trades, when it comes to buying, always buy at levels of support going down, away from price. When it comes to selling, set your resistance level where you feel comfortable on the percentage return. As professionals, we always buy red and sell green. And this will create an internal battle, which is why I always say life's internal battle is the real battle. If you want to know your profitability in crypto and in life in general, how well do you relate to fear? One way that we can relate better to fear is make in advance probabilistic choices. We know exactly what we will do, and we have the integrity to do it as well. If price goes down, goes up, or goes sideways, we are prepared. You also want to have a really good idea of where you want to exit a position, and the more percent return that you want, the longer that you will traditionally have to wait. Please bear that in mind. And it also goes the other way. You need a lot of patience to get these 10-5-10 levels to actually fill. What you'll notice is when you actually buy lower and lower and lower, when you reach a specific sell target, the percentage increase in profit will be very different the lower you buy. For example, if you bought at this 1033 level and you wanted to sell at 160, what you can see is from there where you bought up to where you want to sell at 160. For example, you can sell anywhere you want. You don't have to get these kind of percent returns. Anything in excess of bank interest is pretty good, and bank interest is about 1%. So anything over 1% is good. Remember how we were looking at gold? Remember that massive rally that occurred over so many months? You can actually make that really quickly in crypto, but patience is always required. You basically set your limit buy orders in the market, and you can put them down as low as you want. You can spread out the amount of money that you want to actually put on each level, and then just be aware of the percent dynamics between them. You may get, for example, a 54% increase from here up to this previous resistance level, and then from this level up 68.4, from this level up 80. You can see that you actually make more and more and more money the lower it goes. That's why, as a community, we love buying when it's red. And these long tail rejections can occur quite quickly. You can see that they can come down very, very fast, very quick. So you can't literally be there to pull the trigger. It's often better to just place in market orders. Never buy at market. Always buy at limit, and always use spot. Do not use derivatives. You always have a lot of flexibility where you want to buy and where you want to sell. Just think about it this way. If you want to split this particular buy level over two, you could halve it and put half here, half there. That's a kind of participation trade, but you never want to buy it at the price that it's at. You always want to buy lower. And that takes a lot of discipline. That's why I keep on coming back to this. Life's internal battle is the real battle. And please note, there's nothing wrong with setting your sell orders lower if you wish to. We can see that from this particular buy order up is about 13%. This one around 23, this one around 31. Just think about it like this. Just compare it to bank interest rates. Don't worry about people saying, I got a 10x, 20, 30x return. They're probably lying. And if they're not lying, they maybe have just been holding on because they don't know when to sell. I always remember looking at a particular tweet, and it basically said, this person made $330 million from an investment in a meme coin. I always ask the question, why wouldn't you sell at 100 million? Why wouldn't you sell at 10? Why wouldn't you sell at 1? Obviously, they just forgot about it. There's an entire science behind buying and selling in the crypto market, and you can see the trigger section of the CryptoTradingKS Masterclass covers off this particular area. But one thing or two things that I want you to keep really well in mind. Rule 18, patiently apply the 10-5-10 rule. I'll come back to that. And rule 130, make volatility your best friend. There are so many different ways to trade. You just have to find the one that works for you. When we're talking about 10-5-10, what we're talking about is negatively biased percentages. The crypto market is incredibly volatile, and we use that volatility as our best friend. I'm just going to zoom in here and show you how this actually works. We had a 32.94% decrease in ADA's price over 14 days, so 2 weeks. Within 1 week, it had actually rallied up from that bottom 53.23%. Many people think if it comes down 32, it's got to go up 32 to restore. That is not the way percentages work. There are always tradable opportunities inside every market. Just please bear in mind this concept. The more it comes down, the more it goes up, and it becomes exponentially more too. This is not a real example in terms of the actual price movement, but imagine if it came down 55%. What does it go up? Does it go up 55%? No, it goes up over 120%. What if it went down 69%? What does it come up? over 220%. What about if it went down 80% and just returned to that previous price? It would go up over 400%. There have been some alts that have come down more than 85%. What would they come back? If they come down 85, when they return to their previous price, do they go up by 85? No, they go up by more than 570%. The smart money mindset that I share 7 days a week is all about overcoming this lack of knowledge that causes losses. One thing that people do when they're just new to the crypto market, they will sell on the red. That's when they should be buying. But you have to have the knowledge of why you buy on the red. And traditionally, only institutions and smart money have that particular mindset. In truth, all professionals have the mindset. They understand the numbers and they run them. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. Please say hi and let me know if you have any questions. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, and join our fantastic globally extended family, please subscribe to YouTube. In the comments section, please let me know where you think Bitcoin and crypto is headed. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please do not pay full price if you're interested in this. You can seek out an ambassador and get 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.